Good afternoon, ladies and gentlemen. A very warm welcome to you on Market Today at Business Today Television. Friday seems to be ending on a very strong note as far as markets are concerned. The Nifty is up 1.7%. We've seen a high of almost 22,900 on the index, and we are now at 22,780. Similarly, a strong move coming across the board. The Bank Nifty 750 points higher. The Nifty IT a bit flat, but the small cap and the large cap indices are also doing pretty well. The Nifty mid cap 100 index is up 1.5%, as also the Nifty small cap index, which is actually up 2.3%. So across the board, after a day's gap, yesterday was a holiday, Dalal Street is catching up with Wall Street. Remember, Mr. Trump announced day before yesterday that the tariffs that were to be coming across the board, except for China, have been paused for 90 days. That provides a relief rally not only to Wall Street. Remember, day before yesterday night, Wall Street had actually closed 10% higher, posting some of the smartest intraday gains over the last 2 decades. That is an after reflection of what is now happening on Indian markets. You have a very strong advanced decline ratio, almost 9:1. 2,221 shares are in the green compared with 254 in the red. This is consistent since morning. Ever since there was a gap up of about 250 points on the Nifty, it's rallied higher and higher throughout the day. Let me just give you a very interesting data. If you look at the intraday chart of the Nifty, the high was somewhere in the vicinity of 22,922. From then on, we've slipped about 125 points in terms of profit booking. But a strong rally that has come in, has built up, and is likely to sustain in the coming weeks. So this, ladies and gentlemen, is not exactly a dead cat bounce, simply because things seems to be heading towards the negotiating table as far as this prolonged tariff war is concerned. Remember, all of last week, markets were on tenterhooks. All asset classes had slipped, including crude oil, which went to a 4-year low, gold, which hit a record high, US bond yields, which rose substantially, and more importantly, across equities, there was a very sharp plunge because tariffs that the US threatened to impose and increased dramatically over other nations had come into effect. Same sense prevailed, and at this point of time, Mr. Trump has delayed the imposition of tariffs on all nations except China, its largest trading partner, by about 90 days. So this threat will again reappear before July 9th, but between then and now, bureaucrats, politicians, businessmen, and sensible people will discuss this amongst themselves, and probably we'll see the back of this tariff inconsistency that has injected huge amounts of volatility to the market. Now let us look at what's happening today. As I have mentioned, the mood is extremely buoyant. Apart from the broader advanced decline ratio, look at the advanced decline ratio within the Nifty. Out of 50 shares, 46 are in the green. Look at how the NSE 500 is behaving. Out of 500 shares, 435 are in the green. There are many indices in which all shares are in the green. Look at the Nifty Metals Index. It's the top performer, 3.9% higher. 15 out of 15 shares are in the green. The Pharma Index, 2.5% higher. 18 out of 20 are in the green. The small cap 100 index, 89 out of 100 are in the green. So across the board, there is deep value buying that's happening. A momentum has been coming back into many stocks, especially all those domestic focused companies where there is little chance of a negative impact because of rising tariffs. And the PSU space is a perfect example. Look at PNB Housing, 5% higher. Look at Coal India, 4% higher. Look at ONGC, 3.5% higher. Look at RECL and Power Grid, 3.2% higher. So these are rallies that are happening across the board. Buoyancy is also seen in defense counters. Look at how Cochin Shipyard is behaving, 2.7% higher. Mazgaon Dock 2.5% higher. Garden Reach 2.3% higher. There are sector after sector that is showing extreme amount of buoyancy and volatility on the long side as far as prices are concerned. Apart from these gainers, let's look at where volume is moving along with price. Look at Gravita India. This is a metals proxy, also a proxy for environmentally good companies. They reprocess lead and sell it to the global market. 12% higher. This is at 1785, and about 10x, actually about 11x 5-day average is traded of about 28.7 lakh shares. Similarly, Sarda Energy 12.5% higher, 10 times 5-day average. Atul Limited, LG Equipment, Aditya Birla AMC, Muthoot Finance. Let's just avoid Muthoot Finance for a moment. But Intellect Design, these are counters that are showing extreme gains along with very heavy volumes. One word on gold financing companies, ladies and gentlemen. With the RBI, the central bank, musing tightening of gold financing norms, Muthoot Finance is one of the lone underperformers in the market today, down 5.5%, simply because these guidelines will, these new guidelines which advocate fresh caution may impede the future business growth of Muthoot Finance, trim its operating profit, and generally be a little bit of a short-term pain for this particular stock. Muthoot Finance, if you see the daily chart, has corrected fairly substantially. It was somewhere in the vicinity of 2,400 rupees on 20th of March, and from then on it's slipped sharply. Today's intraday low was 1971, and this happens to be the lowest price that you've seen on Muthoot Finance in this quarter, in this year, calendar year. This was last observed on 9th of December. So there are some pockets of weakness, but some research houses believe that Muthoot Finance is amongst the best companies that can offset this particular tightening of rules that's governed by the Reserve Bank of India. Similarly, which is a beneficial step, gold prices are at a record high. If you look at gold on MCX, it's risen for the third day in a row, providing much more relief to the market. What you see on gold prices is, let me just get you the correct one. MCX gold has actually gone up for the third day in a row, and the price for the moment is, ladies and gentlemen, close to 93,370. So these are volatile times, but exciting times for the market. The simple advice which I have been talking and taking note from many good investors in the market is to ride this volatility, ladies and gentlemen, which now seems to be ebbing. The fight that was there between US and China is now limited to these two countries. Of course, they are the two largest economies in the world, but the rest of the world is sighing a sigh of relief. We've seen many markets come back, many asset classes make a comeback in terms of price. So in this volatile time, the best thing to do would be to look at a large cap fund. If you are a little more aggressive, you can buy a small cap fund as well, and a mid cap fund too, and obviously put in a lump sum, because markets have corrected substantially over the last 6 months or so, and this particular fight that was 15 days old has added further allure to quality stocks, and being in a mutual fund would be immensely beneficial for you, because it gives you a basket of stocks at a single NAV, and of course if you are able to invest periodically every month, then you are buying the market much lower. Make no mistake, we will always hit a record high, if not in calendar 2025, then definitely over the next 18 to 24 months. It is that record high that needs to be aimed at and the preparation has to start today. So look at a quality large cap, mid cap and a small cap fund. Add a flexi cap fund. Look at debt as a part of your portfolio via equity and debt fund. And if you invest regularly via monthly SIPs into quality funds, that, ladies and gentlemen, is the way forward. We have the weekend ahead, festivities all around. Even Monday is a holiday. So please enjoy, and of course pay attention to your financials as well. The weekend could be the right time to maybe narrow down on one or two funds. I'll put in a Twitter reel, and then we can discuss that on Tuesday onwards. Thank you for your time. Have a nice day and a lovely weekend.